In today's video, we're going to take a look at the PIMCO Dynamic Income Fund, ticker symbol PDI. This is the 10th video that's a part of my portfolio series where I'm doing an in-depth analysis on all 31 stocks currently in my own portfolio. If you're new to my channel, my primary focus is on income investing and also dividend growth investing with holdings that offer at least a 4% yield. As I'll say in every video in this series, this isn't done in any particular order, so just because this video is 10th in this series does not mean that this is my 10th favorite stock or my 10th largest holding. Also note that because I own all these holdings, I am biased towards them, so do your own research before making any investment decision for yourself. Feel free to let me know if there's any improvements to this series that I can make going forward. Feel free to check out last week's video, which was on Hercules Capital, ticker symbol HTGC, which is a solid 10% yielding dividend stock that's offered a lot of special dividends this year. Going into my Vanguard account, which is where I do all my dividend investing, as of the making of this video, I currently own 235.367 shares of PIMCO's PDI fund. Their fund pays monthly dividends, with their last being for 22.05 cents per share. With the number of shares that I own of this fund, I receive roughly $51.89 every month from this fund. The PIMCO Dynamic Income Fund is a closed-end mutual fund that invests in fixed income markets around the world. PDI normally invests in a portfolio of debt obligations and other income-producing securities of any type with varying maturities and related derivative instruments. The fund's investment universe includes mortgage-backed securities, investment-grade and high-yield corporates, developed and emerging market corporate and sovereign bonds, as well as other income-producing securities and related derivative instruments. PDI normally invests 25% of its total assets in privately issued mortgage-backed securities and 40% of its total assets in securities of issuers economically tied to emerging market countries. Out of every holding in my portfolio, PDI is one of my most controversial, and I also consider it to be one of my riskiest holdings. For over a year now, people online have been claiming that this fund is going to implode on itself and basically be an absolute disaster for investors. It's a fund that's performed very well for many years, but it's been taking a massive beating due to rising interest rates. You can see by this fund's share price performance that it was a really solid investment before the COVID pandemic and even offered some good amount of growth. But then when PDI was still in the process of recovering, it took a double blow from the stock market falling and rising interest rates. What's been so impressive about PDI though is that despite the fall in share price, it still has not cut its dividend. Right now, PDI still offers a massive 14.33% monthly dividend, and it's continued to pay 22.05 cents every month in dividends since 2015. So despite its NAV falling hard recently, PIMCO's been able to deliver the same amount of income flowing to investors. And based on the type of holdings that are inside this fund, there's reason to believe that once the Fed start lowering interest rates, that its NAV and its share price are really going to recover. Until that happens, I'm more than happy to keep reinvesting my dividends into buying more shares of PDI. If you really want to know the power of these higher yielding investments, let's go ahead and take a look at the total return of PDI since its inception. If you would have invested $10,000 into PDI when this fund first launched on May 30th, 2012 and chose to reinvest all of your dividends, what do you think your returns would look like given how much the share price has fallen in the last 2 years? Probably pretty poor, you'd assume, but let's use a drip calculator and actually run the numbers. Believe it or not, even despite the fall in share price, when we run the numbers, you'd still be looking at a massive profit from your investment in PDI. Over the last 11 years, you would have seen an average annual return of 9.76%, which is incredible given the last 2 years of this fund's performance. Your 395.26 shares of PDI would now be 1,512.93 shares. That means you'd be receiving roughly $333.60 each month in dividends from this stock after 11 years of just a one-time investment. Again, you probably wouldn't expect these kinds of returns from a fund that's done so poorly in the last 2 years, but that just shows how great it can be to pursue these higher dividend holdings. So with this in mind, let's go ahead and take a deeper look into this fund and see how it works. First things first, what investors need to know about PDI is that it's known as a closed-end fund, or a CEF. Closed-end funds are pretty similar to exchange-traded funds, and I see investors mix up the two all the time because they have a lot of similarities. They're both a type of pooled investment security that holds a wide range of different investments, anything from bonds, mortgages, derivatives, stocks, other closed-end funds, and other types of investments. They offer diversification, which is one of the most important things that all investors need to pursue. But CEFs do differ when compared to ETFs and your regular type of mutual fund. Here's a chart that I've shown a few times on my channel that the people at Hoya Capital made. You can see how closed-end funds compare with ETFs and your typical open-end mutual fund like what Vanguard and Edward Jones offer. They're all diversified investment products that hold a collection of different types of investments. But one thing that sets CEFs apart is that they use leverage in order to boost returns on their holdings. They're also actively managed, meaning that you have people who hand-select everything that goes into them. This results in CEFs charging much higher expense ratios than the other two types of investments. But because CEFs do use leverage, this does make them riskier than ETFs and open-end mutual funds. With that in mind, let's take a look at the holdings inside PDI. In their most recent fund card, we can see that mortgage-related investments make up 39.3% of this fund's assets, with 30.7% being non-agency mortgage-backed securities, 7.8% being commercial MBSs, and 0.8% being agency MBSs. These are high-risk holdings, and if you've seen any of my other videos, I'm typically not a huge fan of MBS securities because a lot of companies that invest exclusively in them have a long history of mediocre performance. But PDI and their management team have a long history of performing well, unlike other companies like Annaly Capital and Orchid Island Capital. The management team at PIMCO have a whole group of credit analysts who research and reflect on the creditworthiness of every single holding in PDI's portfolio on a daily basis. That's not to say these analysts won't make mistakes, but they've done so well for many years before the pandemic. And up to this point, they've still been able to cover the same monthly dividend distribution. Following the financial crisis, the government created new guidelines to make MBS securities safer. They're still considered high-risk holdings, but financial institutions can't lend out money as freely as they did before '08. 22.5% of this fund's portfolio consists of high-yield corporate bonds. These are bonds that pay higher interest rates because they have lower credit ratings than investment-grade bonds. Again, just like MBSs, they're considered to be riskier types of investments, and again, PIMCO's team has successfully managed their portfolio for a long time without a serious dividend cut. Like I said earlier, the main culprit behind this fund's share price fall has to do with interest rates. PDI buys debt, and when interest rates increase, then the price of existing debt decreases. This does actually result in a positive thing for this fund, because when the debt inside of it is paid off by the debt or mortgage holder, then PIMCO will take the money and reinvest it into new mortgages and debt, which are now yielding higher. But when the feds raise interest rates, it's going to lower the value of this fund's debt portfolio, which helps explain why PDI's share price has fallen so hard. I didn't start investing in this fund until the share price was all the way down here. Fortunately, I didn't invest in this fund before the pandemic or before it started to recover before going back down. But I'm choosing to bet that the feds are going to stop dramatically increasing interest rates. We recently went through one of the worst bond markets in recent history, so as long as there aren't any big rate hikes, I'm hoping that the share price of this fund will remain stable. I don't think it's likely that they're going to lower interest rates this year, but hopefully they will next year. But another point I want to make is that even if this fund goes through a very serious dividend cut, then the dividend yield would still be pretty massive. If there was a 50% dividend cut for this fund, which would be catastrophic, then PDI would still offer a monthly dividend of nearly 7.5%. In summary, the PIMCO Dynamic Income Fund is a CEF that I consider especially risky, and I don't think it's out of the woods yet, despite remaining relatively stable over the last 3 months. There's no guarantee this fund's going to make it out of this high interest rate storm without going through a dividend cut, but the fact that they've sustained it this long has been really impressive. It's also too early to tell if PDI will ever fully recover to its pre-pandemic share price of around $33 a share. But I absolutely believe that once interest rates start going back down, then this fund's share price will recover. Until then, I'm planning on holding and buying more shares of this fund very slowly. If you hate any kind of risk whatsoever, I'd highly suggest being cautious with this fund and probably not even buying it altogether. But with that being said, that's going to wrap up today's video and our look at PDI. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. You'll also have the option of reading this analysis as well as every other analysis that I do in this series. Plus, it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.